On February 26, 2022, just 2 days after Russia launched its invasion of Ukraine, the United States and the European Union made a decision that many believed would permanently reshape global finance. They announced that several major Russian banks would be disconnected from SWIFT, the Society for Worldwide Interbank Financial Telecommunication. SWIFT is not a bank, and it does not move money itself. Instead, it is the secure messaging system that allows more than 11,000 financial institutions in over 200 countries to communicate payment instructions. Every day, trillions of dollars in global trade rely on these messages to function smoothly. Being excluded from SWIFT does not technically freeze money, but it makes international trade, finance, and settlement extremely difficult. At the time, the decision was described as the most severe financial sanction available. Commentators predicted economic collapse. The ruble was expected to crash permanently. Russia's banking system was expected to fail. Political instability inside the country was widely anticipated. But something unexpected happened. Russia did not collapse. The ruble recovered. Trade continued not through Western systems, but through alternative channels. And more importantly, governments around the world began to draw a quiet conclusion. If access to global finance could be restricted for political reasons, then no country's reserves or payment access were truly secure. This moment did not create a new pattern. It revealed an old one. For more than a century, whenever a dominant power has controlled the core financial infrastructure of the world, and then used that control as a political weapon, the same sequence is followed. The target adapts. Neutral countries hedge. Alternatives emerge. And over time, the original system loses its central role. This has happened before. In 1914, Britain sat at the center of global finance. The British pound was the world's reserve currency, and London was the clearinghouse of international trade. When World War I began, Britain froze German assets and seized German-owned property throughout its empire. The immediate impact on Germany was severe, but the deeper effect was felt elsewhere. Neutral countries realized that assets held in London were only safe as long as British political interests aligned with their own. After the war, nations quietly diversified reserves, increased gold holdings, and shifted financial activity toward New York. Within 3 decades, the pound lost its reserve status, formally replaced by the US dollar in 1944. The pattern repeated in 1979 when the United States froze Iranian assets following the hostage crisis. The move achieved short-term leverage, but it also revealed that dollar-denominated reserves could be immobilized by executive decision. Over the following decade, many oil-producing nations reduced dollar exposure and diversified reserve holdings. In 2014, after Russia annexed Crimea, the United States imposed financial sanctions, but stopped short of a full system-wide cutoff. This gave Russia time. Over the next 8 years, Russia reduced dollar holdings, increased gold reserves, developed domestic payment infrastructure, and expanded trade settlement in local currencies. When broader sanctions arrived in 2022, the shock was real, but not fatal. Interest rates were raised. Capital controls were imposed. Trade routes shifted. Energy exports were redirected. Within months, financial stability returned. But the most important effect did not occur inside Russia. It occurred in capitals around the world. Governments that were not sanctioned began to ask a simple question. What happens if we are next? Political disagreements are inevitable. Trade disputes happen. Regional conflicts arise. If reserves can be frozen and payment access restricted, then reliance on a single financial system becomes a strategic risk. As a result, diversification accelerated. More trade began settling in local currencies. Bilateral swap agreements expanded. Gold purchases by central banks surged to levels not seen in decades. Alternative messaging and settlement systems scaled rapidly. Energy transactions increasingly occurred outside exclusive dollar pricing. None of this required coordination. It was rational behavior. When risk is revealed, systems adapt. The US dollar remains the world's primary reserve currency, and SWIFT remains widely used. But dominance is not permanence. Reserve currency status depends on trust, not only in economic strength, but in neutrality and predictability. When financial infrastructure is perceived as conditional, incentives change. This does not mean the dollar disappears. It means its share gradually declines. It means the global system becomes more distributed. It means no single country can assume permanent financial leverage. Technology accelerates this process. Payment networks scale faster than ever. Settlement no longer requires centralized pathways. Alternatives do not need to replace existing systems entirely. They only need to exist. History suggests that financial power erodes slowly, then suddenly. Britain learned this over 30 years. The United States may experience it faster, not because of weakness, but because the world now has options. The decision to restrict access to global financial infrastructure achieved short-term objectives. But it also signaled something larger, that economic systems are no longer separate from geopolitics. Once that signal is sent, it cannot be taken back. Financial tools, like all-powerful tools, lose effectiveness once their use becomes expected. The moment a weapon is revealed, defenses are built. This is not the end of the dollar. It is the beginning of a more multipolar financial world, one where influence is shared, leverage is reduced, and resilience replaces dependence. Future historians may look back at early 2022 not as the peak of financial power, but as the moment its limits became visible. Not through collapse, not through confrontation, but through adaptation. At Finance Matters, we explore history, economics, and perspective without hype or speculation. If this video added value, subscribe to the channel and press the bell icon to receive future educational releases. Your support helps keep this content independent and informative.